Okay, let's unpack this. What a finish to the week. We're diving into the latest summary from Grok Trade.
Good stuff.
Yeah. So our mission here is really to pull out those crucial bits, the key numbers, the milestones that were hit, the breakouts, especially thinking about those levels we've been tracking from Grok's analysis all week.
Right.
And figure out what it all means for you.
Exactly. Taking that detailed report and boiling it down. Finding the signals, understanding those key levels, like you said. Not just the big picture, but the important details, too.
Okay, so let's jump right in, the stock market. Grok Trade's summary really emphasizes the strength today and the broadness of it. The main indices, SPY for the S&P 500, DIA for the Dow, QQQ for the NASDAQ 100, all up significantly, around 1% each.
Yeah, that's pretty telling, isn't it? When they all move together like that, around the same percentage, it wasn't just, tech having a good day or something. It felt like broader buying interest across the large caps. Gives the rally a bit more weight, maybe?
Conviction.
Conviction, yeah, good word. And within that, Grok Trade flagged something specific for the SPY. It actually cracked $600 today.
Ah, the $600 level. That's noteworthy. Round numbers like that, they definitely play a role psychologically in the market.
Right.
But it's more than just psychology. Often they become technical levels. Big players notice, algorithms notice. So crossing $600 isn't just noise. It sets a new potential floor, maybe a reference point everyone's watching now. Or potential support level, if it holds, yeah. Now, here's where Grok Trade's consistent tracking really helps us connect the dots.
Yeah.
While the big guys were up about 1%, the Russell 2000, that's the IWM ETF, tracking smaller companies, it gained more, up 1.62%.
Okay, interesting.
And critically, it didn't just go up. It broke above a specific resistance level Grok has been pointing to, one we've definitely discussed this week based on their reports. $210.
Right, $210 on the IWM. That is interesting. We've talked about how that level has capped rallies before.
Exactly.
So breaking through it, well, that raises the big question, doesn't it? Can it stay above? A breakout above resistance like $210 is potentially quite bullish for small caps. These smaller companies can be more sensitive to economic optimism. So a sustained move higher could signal growing confidence in the broader economy, not just the mega caps. Grok's summary apparently stresses watching the follow-through next week. Does it hold $210, build a base, or does it fade back below? That's the key now.
Absolutely.
Yeah.
A breakout needs confirmation, doesn't it? You need to see it stick.
Yeah.
Really hammers home something we always talk about, something core to disciplined trading. Having a plan.
Oh, absolutely.
When things move fast like this, you need your entries, your exits, your risk defined beforehand. Just reacting to an overbought signal or chasing a breakout without a plan.
That's tough. Yeah. Very tough. Relying on one indicator in isolation is usually not the way to go. You need context, a strategy. And speaking of context, the Grok summary also pointed to some of the bigger forces, the catalysts behind today's rally.
Right, let's get into that. This wasn't just technical buying, it seems. Grok Trade connected to broader economic stuff, like optimism around U.S.-China trade talks.
Trade optimism. That's always a factor lurking in the background, isn't it?
It really is.
Even just the hope of things getting better, less tension, can be enough to lift sentiment. Trade uncertainty often weighs on markets, so any sign of progress or even just less negative rhetoric, investors tend to like that. The summary suggests that hope definitely fueled some buying today.
And then complementing that trade hope, Grok mentioned strong jobs data reported via Bloomberg today.
The jobs numbers. Yeah, strong jobs can sometimes be tricky. Doesn't mean the Fed tightens. But today, the market took it as a positive, clearly.
Yeah, seemed like it.
Saw it as proof the economy is still solid, maybe easing fears of a slowdown, good for earnings expectations, justifies higher prices. So, yeah, that jobs data definitely added some fundamental fuel to the fire today.
Okay, let's shift gears a bit. The Grok Trade summary didn't just cover stocks, it also hit on crypto and precious metals. And there's some interesting kind of distinct things happening there, also tied to levels we've talked about.
Okay.
First up, Bitcoin, PTC.
Yeah.
After, yesterday felt a bit sluggish, maybe even bearish.
Yeah, a bit weak yesterday.
Today saw a nice rebound. Bitcoin rallied pretty strongly, up about 2.84%.
That's a welcome bounce for the bulls. And what's interesting here, tying back to Grok's analysis we've mentioned, for the past few weeks, Bitcoin's price action, that kind of downward drift or consolidation, it's really resembled what technicians call a bull flag. That's typically a pause in an uptrend, suggesting maybe another leg higher is coming. So today's strong move up, does that mean The breakout from that flag pattern Grok's been tracking is starting, or maybe imminent.
Posing the question.
Exactly. It puts that pattern front and center again. Definitely one to watch in the next few days.
And then in precious metals, we saw a clear split today, which is always fascinating. Gold, the GLD ETF, it actually sold off, down about 1.34%.
Okay, so gold down.
And this is the crucial detail from the summary where it closed. Despite selling off, gold finished the day just above that key support trend line. Remember the ascending triangle pattern we've discussed for weeks?
Yeah, that rising support line where buyers kept stepping in.
That's the one. Gold closed right above it. It's also near its 20-day moving average.
Yeah.
It really shows how price can respect these established technical zones, doesn't it?
It really does. Amazing sometimes.
So for gold bulls, holding that trend line right where it closed today, that's absolutely critical now to keep that bigger ascending triangle pattern intact. A break below could be, well, significant.
Yeah, a breakdown there would definitely change the picture.
Meanwhile, silver, SLV ETF. It did the opposite of gold today. It actually rose, up 0.74%.
Silver showing strength again. It's been outperforming gold recently.
Seems like it. Grok noted it's continuing its climb after breaking out from that consolidation range they mentioned recently. And following that breakout, the summary points to $31.80 as a potential support level now.
Okay, so the old resistance becomes new support, potentially.
Exactly. So you have gold testing this really critical long-term support within that triangle, while silver is actually building on gains above its recent breakout level. Different stories right now, even though they're both precious metals, following those patterns Grok has laid out.
Very distinct technical setups at the moment.
So let's bring this all together for you listening.
Right.
Why does tracking these specific levels, these patterns, these catalysts that Grok Trade highlights, why does it matter for your view of the market? Why care about SPY $600 or IWM $210 or these specific lines in gold and silver?
Well, it's really about context and potential signals, right? SPY hitting $600 isn't just a number. It reflects sentiment in large caps, provides a new benchmark. It tells you something about current valuation acceptance. The IWM breaking $210, especially after we watched it hold as resistance for weeks based on Grok's calls, that could be a genuinely important technical signal, maybe indicating broadening confidence, more risk appetite beyond just the giants.
Right.
And knowing those critical support levels Grok identifies in gold and silver, it helps you gauge their technical health. Are they holding key areas or breaking down? That gives you clues. Seeing how all these different pieces, stocks, crypto, metals react to news and technical levels gives you a much richer, more nuanced understanding of the market narrative.
Yeah, it's not just looking at one chart by itself.
Exactly. It's about seeing the connections, the divergences, the whole mosaic. It helps build that market intuition, that feel you get from tracking these key points consistently over time, which is what Grok summaries help facilitate.
Nicely put.